It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. This is the Thursday edition. Yep, the Thursday edition. Why? Because I'm on Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock until noon. And this is Eastern Time, of course. And a pleasure to be here. A very interesting period we've got. We've moved on to the next thing. Last night it was the debate. And it was closer to debate. Yep. Normally these things are so pre-planned, etc., that you don't feel it's the debate in the traditional sense. And I thought that it got debatey last night, which is good. And it was just a fascinating performance. I'm not going to talk about the issues. I'm going to talk about the performance. And just to mention that it was quite elucidating to see Romney in taking a certain stance and holding that stance and retorting very articulately and very forcefully, but not overly forcefully. And there was a touch of humor there. It was interesting to see Obama for the first time not comfortable without the teleprompters, etc., but being president for almost 4 years, I was disappointed that he didn't articulate his thoughts as well as he should have. After all, if you've done something intensively, something as broad as the U.S. economy and the infrastructure, etc., then you should be able to wake up at midnight and just be able to articulate your thoughts. So I'm not sure why he looked uncomfortable. Looks are really important in debates, not even the words, although it was fascinating to hear some of the discussions, and not talking about the points being good or bad. I'm only talking about the interaction. And what happens in the media is that's done. I remember being from South Africa and being here while all that the apartheid issues were going on in intensity. And I remember Ted Koppel inviting, I think it was Tutu and someone else he said, you're talking to me right now. It was on the 90 program. And he said, why don't we set up a television debate and conference and discussion? Let's make a date right now. And lo and behold, they made a date, and the media just grabbed on it. And what was interesting, as soon as later on, as soon as Mandela became president, and I know what happens in the media, the cameras, they just take the cameras and they leave the country and they move to the next spot. And it doesn't matter what happens in the other country. They've done their job. And the media just moves on to the next big story. And now what's the next big story? Jobs for tomorrow. So we're looking at the market saying, hey, we're comfortable at this particular point. We've got a situation that says we've got a little bit of a game changer here, but there are two more debates, and there's a vice presidential debate to come on. Let's look at the next thing, and that's going to be the jobs numbers tomorrow. And my guess is that we'll suddenly see it under 8%, and it'll bring another little thing into the equation. Hey, whatever it is still the articulation of thoughts that are succinct, and you're going to nail it down to something really simple, 2 to 3 words. Like jobs could be the 3 words. It doesn't matter. And so that's that. And the fascination right now in the market is the Dow is up 74, up 0.55%. The S&P is up 8.55%. Actually, they both jumped to 0.56%. And even more importantly, you've got the 3 bears pulling back. And what is that? You've got the VIX. Actually, I haven't looked at it for a while. It was pulling back. Yep, it's pulled back. It's down 17 cents at 15.26. Hey, in the mid-teens, it's buying pressure that's still there. You got bonds. Let's look at the TLT. The TLT is down a little bit. It's down 59 cents at 123.70. I have to tell you, those bonds are holding in really well. Why? Because they've got the backing of the Fed. That can be the only reason, because for the Dow to have run up like this and for bonds to be still above the 9-period moving average of 123.67, if you're looking at Tiger TV, you're right there. Right there's that black line, and the stochastic fast-moving average has turned down. Still very strong in the slow-moving average. That hasn't even started to turn down yet. But of course, the fast-moving average has the quicker maneuvers. Now, what's even more important is that the stochastic has turned down, but it's still at 85%, and the month has only had 4 days. So the Roman candle of last month is going to be a big deal, and I'll tell you why. The low was 118.05. If bonds trade, they can't just touch it, but if they trade for more than a week underneath 123 and get into the middle of that wick, there's a good chance that you will test the bottom of the wick. Not you, but the bond. So TLT will go to the 118 level. But if it's able just to hold in here between 123.20, say, not on a close, I'm talking about just, probably on a close, but I'm talking about intra-week, and then for 2 weeks, hold it in there and try to get to the top of the middle of the candle, somewhere around 124.52. That's it. That is interesting. Because all it needs to do is to close above what I call the Roman candle, ChapmanWave Roman candle, above 127.63, and it starts up. And I've still got this. I've got this as a peak C. But look, you had a low of 87.56 in the T-bonds back in June of 2009. Ran up smartly to 100.31, and then pulled back and made a fractionally lower low at 87.30. Then it went even higher. It went to 109.34 in August of 2010. Pull back, went to not a lower but a higher low bar, higher than the previous two. But if that 87.30 was 87.56 or 87.57, I would then have to call this peak C a peak D. Wow, that sounds complicated. I want to go through that because we're talking a monthly chart. We're talking years and years. We're talking about 3 years worth of data. So to miss by, I'm very strict about this, but the monthly chart always has a little flexibility because it takes so long to form these patterns that there is a chance that I might have missed something, and that it is the, I haven't got it in this one, darn. I'll switch in a second. But it is this peak C here that is actually a D. And a D, you've got to be very careful, especially when you see that the technicals are starting to turn down, even if they're still holding very well. It says be careful, because that is where you have the greatest vulnerability. So over 27 cents. Remember in the crude oil at CL.C. Oh, wrong chart. All right, here we go. Black charts. Here we go. I need to show you this because it's really important. After all, in my work, I make a big deal about a one penny difference. So it should apply to everything. You see, I've got an alternate count, but I could be already at E in the very long-term 24-year up channel, 31-year bull market of the 30-year U.S. Treasury bonds. And there again, you've got that turnaround, and my on-balance volume is starting to make lower highs. I'm watching this really closely. What does it say? Now, I'm going to make it even more complicated. Tuesday and Thursdays are going to be the days that I make things. I go into this free-thinking aspect. That's one of the major reasons why I wanted to take it. I like to get my thoughts out, and if I don't get it out in the open, then I don't remember if I've said it or not. This way I've said it. I know I've said it. Think about this. If there is, by the second or third debate, there is a chance that Romney is in the lead, what does it say about uncertainty in the market if Bernanke is going to be bounced? After all, Bernanke, I don't care what your leaning is. I don't care what the outcome in the future is. At this particular point on Thursday, October the 4th, 2012, the stock market is within 7 or 8% of its, the Dow is within just less than 10% of its all-time highs. It's not in the 6,000s or the 9,000s. You've got to say that Bernanke was a huge influence. I understand the whole pumping of money aspect. That's just something else that we're going to have to deal with. But the reality is that right to date, housing has improved tremendously in the areas that were worst hit. The jobless number, I believe that there's a huge underground economy, which is not being picked up. But that might be not huge enough to change the percentages big, but I believe it's bigger than it has been for a long time. I also believe at the same time that if you look at areas of real estate that we might be finding based on the IYR, that's the REIT index, IYR, let me just jump there, IYR, that in fact rentals, because of the price of houses are moving higher, that the rentals need to go higher, and that fact there's a little disappointment now in the IYR. And will it get to a leg D in the, it went to a peak F, this has to be a peak C. Will it get to a leg D above 68.26? We'll see. It's holding the 9-period moving average. But we might find, based on the daily action, that has started a consolidation in both the daily and the weekly. And I'm watching that really closely because the rental units in some of the areas might now start to be coming overpriced, which means that the value of the houses that people are picking up or rental property are too high to be able to maintain a rise in the rents. I'm just thinking out loud. So we're going to watch this real closely. So you put that together and we could start to see some kind of hesitancy. And that goes to this area here that I've drawn. I hope I've drawn it. I wanted to show you crude oil. Let me just go to the crude oil chart. And the crude oil chart is, I get it by going at. Oh, I got a whole thing on the at symbol. A guy here at BBN, that was Bolt, Beranek, and Newman, used it as a convenience because he didn't know what to use to get computers to connect, to start building. He didn't know it was the internet, to be able to get them to connect. And how he came about is quite fascinating. In the, what magazine is it? Smithsonian. All right, so look, so you've got crude oil. That I missed that phantom peak right there. Oh, phantom, it's a phantom peak right there. And if I had got it, it was there. I just didn't see it till too late. We got that peak D. Well, the same thing might be happening here in the bonds, in the TLT, because in the TLT, if in fact that 27 cent difference says that I've got to start my buy mode right there in July of 2009, then we have reached a peak D in bonds. Bernanke gets bounced, and all of a sudden, you've got the Japanization of our bond yields changing, because we might start to see that rates go higher as bonds come down. So that's something that we can think about. All right, 877-927-6648. We're going to go to Freeman in Dallas straight after this break.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour, Monday through Wednesday, Friday, at 11 o'clock till noon Eastern Time. Don't forget, today is Thursday, so you got the Commodities Hour coming up, Futures Hour, Commodities Hour with Larry Pesavento. And wow, this is a perfect time for that, because there are some very interesting things going on in the metals, the dollar, the euro. We're going to look at this. I'm going to look at it just now as well to see whether or not we've got some trend changes bumping up against resistance. Are they going to break out? What are they going to do here? We're going to go to Freeman in Dallas. Hi, Freeman. How are you?
Pretty good, Basil. Good morning. I wanted to look at our Smith & Wesson.
An old favorite, yes.
Yes.
So SWHC was trading at $10.19, down 21 cents. Now, this is, for me, this is very interesting because it had a spectacular move. I'm using the white charts here. I'm doing them fresh, doing the ChapmanWave notation as quickly as I can. The breakout that occurred in the monthly chart is going deep into the area. It made an all-time high. 2280 was that all-time? Let me just double-check. Yeah, all-time high of 22. I'll go to the black charts just now because those are all notated. At 2280 back in August of 2007. It pulled back to 153. I wouldn't call that a pullback. It got smashed down to 1.53 in the pattern I call the Eiffel Tower, like an inverted pyramid or the capital letter A. It jumps. It goes all the way down to 153, rallies up to 750, pulls back to 229. So that's a higher low bar, and it starts a leg I could even call that A, that B, and that C, and this could be a D, or it's a C. But the fact is, the stochastic is very strong at 88%, but it is turning down, but still very strong. And the MACD is rallying. So this seems to me, at this particular point, it has to be considered in a counter-trend rally in the monthly chart as still very positive. Weekly chart is absolutely fabulous in that it went, in the last move up, it had a move from the low of October, the week of the 7th of October, 2011, from 307. We were fortunate enough to get this at one point and had a really, I thought it was a fantastic gain. We took our profits, and then I wanted to get back in. It went to 860 in April of 2012. Peak F in the ChapmanWave, that's the sixth highest peak. Pulls back. Where does it pull back? It pulls back to 607. I was waiting for the 590s or something. It never happened. It just spectacularly ran up to ABC, and now it's made a peak D at 11:21 on a week of the 21st of September. This is going to be very interesting. Why? Because the stochastic is at 90.41%, but turning down sharply, but hasn't crossed negative in the weekly chart. The candle that's forming today, the 2 days before the end of the week, is a candle that says don't go underneath or don't close underneath 992. Actually, it's 991. Because that'll be a very big negative, saying that this is what I call a right shoulder failure pattern. If the stochastic joins in, starts to go under 80%, but it hasn't done it yet. By the end of the week, it could have. That means by tomorrow at 4 o'clock, it could suddenly have a little bounce close at 10:59, 10:62, and all of a sudden you've got yourself a high-level consolidation. So now we're going to break it down to the daily chart. And the daily chart says, be careful. There's a gap, which I'm sure you looked at 10.03 on the 7th of September, and the high the previous day was 914. So that gap of about 76 cents, 80 cents, looks to me like at least partially it's going to get filled. There's a huge gap down below that has a little doji low of 703 on the 28th of June, and the next bar has a low of 764. Will that be filled? Well, that's not the question we need to ask at this point. What we need to say is, what is the level within the gap, which looks likely to be filled at this point? We don't know, but it looks likely. That would be underneath 10.03. That's 3 points higher than that original breakaway back in June. How will that be filled, and what will happen? Well, the candle I would be looking at is the candle of the 2nd of August. The high was 969 and the low is 903. So I'm going to draw another little rectangle here. I'm beginning to love these rectangles. I've done them on my other charts, but they're always so dark and things are not perfect there. So I'm going to put this in as a different color. I'm going to put it in kind of, I'll make it pink. I'll make it pink only because I'll explain why. The full color is pink, and I'm going to change. Are you in it at all?
No, I'm trying to start a position.
Okay, and it has to go long, right?
Yes.
Okay, good. That's exactly what I'm working on. So when I get back, I'll explain to you exactly what I've done and what I'd be looking at as a starter position to see if it's going to get a good bounce, at least to go back to the 11s. I'll be right back. Basil Chapman, 877-927-6648, and we'll look at copper and other things.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com, where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, and we're on with Freeman in Dallas, and we're looking at SWHC, which is Smith & Wesson Holding. I love it. They've got this euphemism. What do they do? They are in, I wrote it down in my black charts, they are in recreational products. Of course, they're in guns and ammo. That's what they're in. But you know what? I'm looking at a chart. I'm prepared to trade a chart. I'm not prepared to philosophize about these things. It's just, it is what it is. And I'm going to just deal with it that way. And what I wanted to talk about is there's a pattern that I discuss, where did it go? That I discuss very often. It is the gap up that creates the flagpole. These are standard terms in technical analysis, which becomes a flag pattern, sideways flag pattern. I like to call it as a rectangle formation. Within the rectangle formation, I couldn't tell you how many times you will get an inside buy mode with the ChapmanWave as long as the low bar of the gap is not decisively pierced. Well, on the 7th of September, the low was round number high 11, and the low was 10.25. The round number high says, okay, be careful. Round number high at the open says if it isn't pierced within a day or two, that you got to respect that as a pretty decent short-term sell signal in a shorter time frame. But it's the bottom that is important. I don't mind if it goes out of the low, which is 10.25. Briefly, it is time that is very important. When stocks that gap go into the gap, gap up. If they go back down into the gap and stay for a little while or go too deeply, you probably won't get this pattern. But if the buying pressure, and especially with the volume that you saw, the huge 3.9 volume, no, it's more, it's together. It's about 8.5 million. A volume way higher than ever before. That's like a volume climax. In my next Master Trader series, I'm going to be going through a bunch of things. One of them are volume climaxes that I'm going to be discussing, the work that I've done on volume. Now, what's really important about it is that within it, you got the 120-minute chart, you got a peak A, B, C, D, pulls back, and then it goes to right arm failure, EF, but a doji candle that says, I want a high-level consolidation. And that doji goes above 11. It goes to 11.21. Pulls back. You see the pink formation that I've got there, or this reddish light red? That says that's an area of containment. It's an area of, it's a tremendous barrier when rectangles last for too long. And the next thing that's going to happen is you're probably going to see a break below the major support, which is the support of 10.03. Now, just to show you something, how patterns repeat over and over and over. Remember, some of you might remember yesterday. Now I'm going crazy with these charts. I wanted to keep it as quiet as possible, but I've added. So you remember the 2-minute chart that I showed on Lock yesterday? That's LifeLock Inc. You remember I showed it at making a top in the 2-minute chart. Now look at this. It makes a peak D. Remember, peak Ds are the ones that you got to be careful of. It doesn't have to, but if it makes a peak D with all the requisite negatives after that, when it breaks out of the long rectangle pattern, what did it do? It broke under yesterday's low, its IPO low of 836. Right now it's trading at round number 8. Now it's trading at 801, round number low 8. So you've got to watch really closely when you get the rectangle formation that breaks down. So this is what I'm going to recommend. Have patience. And I'll tell you the 2 reasons why you should have patience. One is you want it to settle down and you want to establish a low. And that low better not go into 914, the high of the 6, because if it does, then the weekly is going to start to be impacted, and then I would have to wait quite a while before I got back into it. That's number one. Number 2 is the patterns that we're looking at say that 986, the 200-period exponential moving average, is probably going to be tested, and that would be a place to at least start to consider that maybe you can have a pretty decent bounce at that point. So I'm going to say to you, hold off for now, have patience, because if it starts to rally back up, the way the weekly chart is acting, it's really close to some kind of consolidation. So I don't even see it going much more than to 1138, 1140. I don't think you want to play that if there's a high risk. But as a quick trade, you might want to do it if it closes above 1064, tiny little bit as an experiment to see if it's going to go higher. Nothing more than that. I would have the patience to see how it tests the whole 997 to maybe even the 860 area. See what happens. Give it time. It's had a spectacular move. It needs time right now. So I could have given you the easy answer just to wait and see how it tests the 960 to 950 if it's going to get there. But in the meantime, I'm going to say those are the levels I've just discussed, like that 980, what did I just say it was? That 986 is going to be very important because the stochastic and MACD are really close to some kind of a bounce, and it says that I've just gone out of the boundary for a little bit. I'd like to go back to say goodbye to my friends. So it might have a bounce of 1.5 points. Hey, that could be between 8 and 12% just on a bounce, which I'm sure you would like. So that's the only way I'd trade it. I think it's overextended, but believe me, it's one that's been on my list for a long time because that monthly is still very strong. That's what you're looking at, right? Freeman, you still there? Oh, sometimes Freeman has to get off the phone and he has to listen on the radio. So if you're listening, Freeman, those are the parameters I'd be looking at. But it's definitely, remember, RGR was one that the other one. That's the major one. Ruger RGR. Let's see what it's doing. Made a peak D top of 5203. Made a peak F top in the monthly. These things this could be in trouble. Ruger could be in trouble. Yep. I'm going to say that stay away. I would stay away from them both right now. They're in sync, and I just hold off. So that's my answer there. Okay, copper. HGZ. I know Larry will be probably going through a whole chunk of these things. I'm looking at them just as ChapmanWave patterns that I wanted to talk about. Copper, I looked at gold. That's HG, and we want to look at that as well. So the HG copper, see what happens in these patterns. In the copper, it goes to, from the low bar that was established on the 2nd of August. I want to spend a little time on copper because it's really important. Copper needs to break into it really needs to get back into the fours for me to get an economic picture saying there's actually strength out there, not the weakness that everyone's talking about. Right now, it's more counter-trend rally. So let's just look at it on a short-term basis. The daily says the low of the 2nd of August at 3.30 had a nice run and went to peak A. On the 7th of August at 3.46, pulls back, goes to a doji high. Silent doji goes to on the 23rd of August, pulls back, holds the 9-period moving average, breaks above 3.5170 by 1 penny, starts a big move, a huge, one of the biggest moves we've seen in the short term in copper, goes all the way to 3.83 on the 14th of September, pulls back 3 days, makes a high on the 19th of September. It's 3.8395, pulls back, and now there are two patterns. It's taking too long to get back. I'm a little nervous here about some of these metals and commodities. If copper is able to break above 3.8225, the high of yesterday, of 2 days ago, I say, great, now I can retest the high of 3.83, the high of the 19th. But even then, the technicals are weak, and it's going to have to be a fabulous move to turn everything to the upside. So price is holding, technicals are weak. If you look at the weekly chart, that's very good. So I'm suspecting right now, if there is a pullback, the big test will be, how does it hold 3.68? If it breaks down, it's making lower lows and lower highs. It's in a little bear phase, mini bear phase on the daily, and the weekly says, be careful, because 3.664 is the 200 period, is the 9-period moving average, and this 200-period moving average, which I made a big deal of, has been the fulcrum by which it's gone up and down and up, but mostly down. It's trying to get there and stay there all the way through the beginning of 2012 from the breakout in January, the week of the 20th. It couldn't hold. The big breakdown came about the middle of May. And the last 4 weeks has been the first time that it's trading above the 200-period moving average. And the stochastic is at 92%. So I like that. I'm saying that I've got short-term signals saying that copper has to be watched. How it breaks out to the upside above the 385s is important. How, if it breaks down, how it holds the 365 level is going to be very, very important. 366, actually. So that's what I want to look at there. Now, the monthly chart of copper still says, hey, there are no real big signals at this particular point. But now let's do this. I wanted to talk about, I had a question. I wrote it down. Yeah. Someone had asked me about a stock I'd only heard of. I didn't know about it, but a spectacular move today, but it was unfortunately to the downside. And I did some quick work on it, and then I had to leave the office for a little bit, so I came back. I just wanted to see what it's doing right now. This is NUVA. Do I know what it is? It's Nuvasive Inc. Must be biotech. Well, I did a quick bunch of work on it. The most recent work, let me go back. I don't have time to do that right now. No, I'm going to do it. I want to demonstrate the ChapmanWave and what you can do with it. Always find the most lowest low bar. Let me just do this real quickly. On the 19th of December, it made a low of 2011, and it goes up. It goes a peak A, and I'm doing this on the white charts. I've made it so that you can really see it very nicely. It goes to the requisite peak D. The MACD helps it. It comes down, pulls back. It goes from doji and a silent doji on the 3rd of February at 17.48. Comes down to another doji candle, 23rd of Feb, 2012. Starts a new move up, goes peak A, peak B, peak C, and then it pulls back sharply. Now, you know what I always say in the ChapmanWave, you're not the boss of whatever it is, of the tradable that you're following. You can only do whatever it is in your technique. So I would have done this. I'm absolutely sure I would have gone G/C. Why? Because the stochastic and MACD were way lower than it was at that previous peak that I said was a peak E. This looks to me like a right arm extension. The previous high was 17.48, and now it went to 17.89. Then it pulls back, but it holds beautifully. It doesn't break the low of the 6th of August. So I put GC. I will definitely put a little hat on it, a little cap, that inverted V shape, which says I've already got the sell signal. This was a right arm extension failure or a double top or the drop bucket pattern that I talk about. And it's pulled back. It should have retested the low, because based on the ChapmanWave methodology, if it makes a little cup handle, or if it fails and goes more than a third to a half from the lip, the right side lip, to the base of the cup, it's probably going to test the low. Well, it didn't. So it starts a brand new move. So I go starting, I put an up arrow, and let's see if it makes a peak D. It goes A, B, I'll explain where and why, and lo and behold, what does it do? A peak D. I don't know how many times today in this 1.5 hour, well, 45 minutes, I've shown you these techniques. So it goes to this beautiful little doji on the 4th of April at 15:38. It goes to another peak D at 21:28 on the 2nd of May. If you're following this, is NUVA is the symbol. Trading down 7.43, down 32%. So now let's look at what happens in the ChapmanWave. We get a new signal based on the stochastic and the MACD at 18:24 on the 23rd of May, and lo and behold, you get peak A, B, C, D, E, F, and I have to call it an F based on the fast-moving average of the MACD, and it goes to G. I could have had a parallel waveform saying that was E/A, F/B, G/C, but then it breaks down. So I don't even have to put a down arrow until the MACD and stochastic start to break down, and it starts right at G. So what happens? It pulls back, it pulls back from the top on the 5th of July at 25.99, makes a beautiful, it always makes dojis. This is a beautiful trading, a beautiful chart pattern. 1944. On the 8th of August, it starts a brand new ABCDE. It goes to an F, struggles, breaks down yesterday as the stochastic had a right shoulder failure. It made a much lower low. That's your divergence as it's going up. It says at peak F in the ChapmanWave, what do you got to do? You got to be very careful. So if in the stock, you should have taken a little bit off at D, but because the fast-moving average of the MACD was still good, you got to put a little stop in. It says, if you get a peak F and you close underneath, which you did yesterday under the 9 EMA, just be careful. So you could have taken some off. I don't know about shorting. I'm not sure I would have been shorting this. Now look at the weekly. Look at the pattern of the weekly. It goes to a peak D, fails on the 200-period moving average, plop. Look at the monthly. Did I do the monthly? Makes a peak D all-time high. Back on, this is a counter trend rally, back on in September of 2008 to 58.88. It's trading today at $15.21. That's how you can use these techniques. I'm sure you can use all other techniques as well. I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern. on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question, are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this. Today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks in the room. Remaining time we got. I was asked in the den by Lucky if I would do the IWM. It is such an important index to look at right now. In the monthly chart, the high of 85.20 was made in July of 2007. At 85.20, it slumps. It goes down to 34.26. That 34.26 was made. 34.26 was made in March, was it? Yep, March of 2009. It runs up to peak ABC, and that was a peak D at the top in 2007. Then it goes ABC, goes to D to a new recovery high. And this is fascinating how these, if you want to learn about this cup formation, it is so important. At 86.82, how does it know that in 2 years it's got the same kind of time pattern, a little longer actually, it goes 1.62 cents above the previous, or after being smashed more than 45%. Look what happens. It makes a handle formation, touches the 200-period moving average, the gray line there. I'm going to stretch it out. I can see on Mobi 1 you want to be able to look at it. And makes a double cup formation with a higher low bar and a higher high, slightly higher at 86.96. It's 14 cents higher. And that is E or /B. It's either brand new buy mode confirmation, or it's the top. And look at the gray line the gray passage there that I put all the way across, that resistance line So this is really important because now the MACD is only at 79. It's not at 80%. The MACD is flat, which maintains the previous signal, which is that low there at the bottom of October of 2011. But the stochastic is rising, but only at 79%. Not bad. Now let's look at the weekly chart. The weekly chart, and I had drawn this a while ago to show the patterns that were forming, which it fortunately broke away from, because it was a pattern that was exactly the same in the arch formations, and that's why you put them in to show you what can happen. It doesn't say it has to, but it gives you a benchmark. Instead, that low that was made in week of June the 8th of 2012, this year, started a brand new up move that went to this recovery high. So I can get rid of this because it didn't match. It matched for a little while, and then it didn't. And that's really important to know, because it says you broke away from the arch formation and you went into an up channel. It's even an A to B equals B to C in many ways, or even an Elliott wave in a certain extent, if it can break out to the top. But no, it's got this tremendous resistance. In fact, I'm going to get rid of all this now. It's irrelevant now. It was important at the time. So what is the IWM saying? It's saying, I'm at this period where I've had a tremendous amount of resistance before. I'm struggling to get above, but I'm still holding very well. What's going to make a difference is if I go to 87.50 to 88, I've broken out. I'm in a brand new buy mode. That has to be leg C. But if I start to fail here and I take out that doji candle of August, the week of the 12th of 80.34, you better be careful, because the daily chart is showing signs after a peak F of having a tough time. It has to start to spike later today or by tomorrow at the latest, because at this point it's making the pattern that I call the dreaded H, lowercase h. The stochastic is flat at 21%, showing no signs, no testosterone, no nothing. And the MACD is pointing down. That says that it should fill the gap below 82.52 to 82.52 is the low, 82.51 was also the high. That candle there is going to be absolutely critical with a low of 81.85. So we've got to watch that closely. So as it stands right now, I'm back to putting on short positions. I'm trying some new long positions, but I am light. I said, folks, buy a tiny little bit of our longs. I want to see what happens over the next few days. So I'll be back tomorrow. Stay tuned for Larry Perseverance. It should be a wonderful show as always. And I'll be back tomorrow for my Friday edition. My service is the opening call. Check it out.